Hello everyone. Today we're going to talk about something that many people hear about all the time, but might not truly understand. You hear it on the news. You hear it in conversations. You even see headlines saying things like, the stock market is up, the stock market is down, or the stock market is crashing. But what does that actually mean? What is the stock market? In this video, we're going to slow everything down and explain the stock market from the ground up. You don't need any background knowledge, and you don't need to understand finance to follow along. By the end of this video, you will understand what the stock market really is, why it exists, how it works, who participates in it, why prices change, and why it plays such a big role in everyday life. This video is for educational purposes only, and everything we discuss is meant to help you understand how the system works. So relax, get comfortable, and let's get started. So what is the stock market? At its simplest level, the stock market is a system where people buy and sell ownership in companies. That ownership is called a stock. When someone buys a stock, they are buying a small piece of a business. When someone sells a stock, they are selling that piece to someone else. The stock market is the system that allows those transactions to happen. It's important to understand that the stock market is not a single place. It is not one building or one room where everyone gathers. Instead, it is a network of exchanges, computers, rules, and systems that connect buyers and sellers from all over the world. Every time someone wants to buy a stock, and someone else wants to sell that same stock, the stock market helps match those two people together and complete the transaction. Without the stock market, buying and selling ownership in companies would be extremely difficult and disorganized. To understand the stock market better, think about a regular marketplace. Imagine a place where people come together to trade things. Some people want to buy, and some people want to sell. The price of an item depends on how many people want it and how many people are willing to sell it. If a lot of people want something and very few people are selling it, the price usually goes up. If a lot of people want to sell something and very few people want to buy it, the price usually goes down. The stock market works the same way, except instead of trading physical items, people are trading ownership in companies. The stock market keeps track of what is being traded, how much people are willing to pay for a stock in a company, how much people are willing to sell their stock in a company, and when trades happen. The stock market doesn't decide what a company is worth. Instead, people decide based on what they believe and expect, and that's what ultimately determines the company's stock price and worth. So why does the stock market exist? The main reason the stock market exists is that companies need money to grow, and people want ways to invest their money without having to own an actual company. When a company wants to grow, it often needs large amounts of money. This money might be used to build new facilities, create new products, hire more employees, expand into new regions, and invest in technology. One way companies can raise this money is by selling shares of ownership to the public. So instead of taking huge loans from banks in which they would have to pay interest on, they simply provide investors an opportunity to become partial ownership in the company in exchange for funding. So when people buy stocks, they're essentially giving the company money, and in return, they receive partial ownership of that company. The stock market exists to make this process possible, organized, and fair. On the other side, investors use the stock market as a way to participate in the growth of businesses. Instead of starting their own company themselves, which requires a lot of work, they can invest in existing companies and benefit if those companies succeed over time. The stock market connects businesses and investors in a structured and regulated way. So how does the stock market function on a day-to-day basis? On a daily basis, the stock market is constantly active. People are placing buy orders and sell orders throughout the day. A buy order is simply someone saying how much they are willing to pay for a stock in a company. A sell order is someone saying how much they are willing to sell a stock for. When a buy order and a sell order match, a trade occurs. That trade sets the current market price. Prices can change second by second because new orders are constantly being placed. Stock prices can move because of company news, earnings reports within the company, new information about economic conditions, interest rates, investor expectations, and emotions like fear and excitement. The stock market reflects how people feel about the future of companies. It is forward-looking, meaning prices often change based on what people think will happen according to current company conditions, along with what has already happened. So what is a stock exchange? A stock exchange is the platform where stocks are officially bought and sold. Stock exchanges provide structure, rules, and transparency. They help ensure that trades are recorded correctly, prices are publicly available, rules are enforced, and investors are protected from scams. Examples of stock exchanges include large, well-known exchanges that handle massive volumes of trades every day. You can think of a stock exchange like a trusted organizer. It doesn't decide prices, and it doesn't tell people what to buy or sell. It simply makes sure that the system works fairly and efficiently. So why do stock prices change? One of the most confusing parts of the stock market for beginners is price movement. Stock prices change because of supply and demand. If more people want to buy a stock than sell it, the price usually rises. If more people want to sell a stock than buy it, the price usually falls. But behind that simple idea are many factors. Prices can change because investors believe a company will grow. Prices can change because investors believe a company will struggle. Prices can change because of good news, bad news, or uncertainty. Sometimes prices move even when nothing obvious has changed. This happens because markets are influenced heavily by emotions. Fear can cause people to sell quickly. Optimism can cause people to buy aggressively. The stock market is not just numbers, it is human behavior in motion. So who participates in the stock market? The stock market includes many different types of participants. Some participants are individual investors, everyday people investing their own money. Other participants may include institutions, such as retirement funds, pension funds, insurance companies, and investment firms. These large institutions often manage money on behalf of millions of people. All of these participants interact in the same marketplace, buying and selling stocks based on their goals, timelines, and beliefs about the companies they're investing in. Here are some common misunderstandings about the stock market. A common misunderstanding is that the stock market is the same as gambling. While both involve risk, the stock market is a more calculated risk that represents ownership in real businesses that produce goods and services. Another misunderstanding is thinking the stock market only benefits wealthy people. Many people invest through retirement accounts or long-term investments without actively trading every day. Another misconception is believing that the stock market always goes up or always goes down. In reality, markets move in cycles, and long-term trends are shaped by economic growth, innovation, and productivity. If you're new to the stock market, the most important thing to understand is how the system works. The stock market is not mysterious once you break it down. It is a structured system where people buy and sell ownership in companies, driven by supply, demand, expectations, and human behavior. You don't need to rush. You don't need to predict prices. You don't need to make decisions immediately. Education comes first. Understanding how it works is the first step toward making informed financial decisions in the future. The stock market is a powerful system that plays a major role in the global economy. Understanding it helps you make sense of financial news, conversations, and long-term planning. Thanks for watching. If you found this video helpful, make sure to like, subscribe, and check out our channel for more amazing videos that can help you grow your investment portfolio.